All right, what's up, everybody, and welcome back to the LV Home Experts Show, where we talk about real estate and financing worldwide. That's right, we are worldwide right now. I got my man today, my co-host, the guru of financing, Dan French.
What's up, guys? What's happening?
Oh man, you know what? It kind of looks blurry. You know, I got to make one adjustment. Why don't you go ahead and talk to the crowd while I make this adjustment real quick?
Hey, you just sounded like, you know how, what is that guy's name that starts off the UFC fights?
I'm not sure.
You sounded like that guy from the UFC. What is that guy's name, man?
Let us know in the comments.
Yeah, let us know in the comments who that guy is. What's his name? Yeah, man, so what's going on this week? We actually had a lot of stuff going on with rates were doing good and market's doing good. What's going on with you today, Chakits?
All right, let's not talk about rates right now.
Yeah.
All right. So on today's show, Bruce Buffer. There you go. So what we're going to be talking about today.
What was wrong with that camera? Had a change a little bit.
Yeah, I actually had to adjust the clarity a little bit more.
Okay.
You know what I'm saying?
Yeah.
We were kind of a little bit blurry because when I was making those adjustments, I threw one camera off. So
yeah.
But anyway, so today we're going to be just talking about real estate in general and also financing. And I was going to say call into the radio show today at 702-409-4495. However, that is not going to work. And the reason why is because I did a dumb move like always. I left the phone at the house.
Hey, but you could call in. and leave a message and say that you saw the show.
Yes, that would be great. Or you can go ahead and comment below. And we got my co-host here, Dan French, with Guaranteed Rate Mortgage. What a cheap plug. Go ahead and ask your question. But before we get into it, I want to talk about what is going on with the economy. So what's the deal with that, Dan?
Economy's doing very well. I know Vegas here is really thriving right now. Record highs on pretty much everything across the board. Index is up year over year. You got consumer demand is up as always. It's a lot of movement, man. Even though it's holidays and it seems like it should be the slower part of the year.
I know, isn't it crazy? I literally just got 3 escrows this past like 5 days.
Wow. Isn't that crazy?
Yeah, things are just moving, dude.
Wow.
And what I realized during this time of the year, a lot of agents and also mortgage brokers, they're going to take off for the holidays. And the good news is that if you are an agent and you're working in today's market during December, right, you're going to make a lot of money.
Yeah, you're going to make some money, and you got to get it while it's hot, right?
Yeah.
So I want to talk to you a little bit, though.
Yeah.
This is off topic about...
Let's talk about whatever you want, man.
Okay, so you celebrate Christmas, right?
Hell yeah.
Do you guys do big on presents and really get into it or not really?
You want to know something? For me, I'm such a Grinch, so I'm not one of those guys that have like a Christmas tree. But every once in a while, I will.
Wait. You don't have a Christmas tree?
No, I don't have a Christmas tree. Not this year. It depends. Now, like, let me give you an example. Some years, I've got like the Christmas spirit, so I'm going all out, right? Unfortunately, this year I'm not doing that. But I remember one year I got the Christmas tree. I spent like so much money. I got the trees, got the lights, right? I even went outside. I wrapped up my tree on the outside, right? You know my tree, right? I wrapped this whole thing.
Yeah.
All the way up into like, I'm talking about 12 feet high. All right. And you know how it's got like the branches breaking off?
Yeah.
So what happened was when Christmas was over, I got lazy. So what I did was I just threw away all the trees, right? I threw away the tree with all the lights attached to it and all the ornaments. I didn't want to take it all apart. And on the tree, I just pretty much cut all the wires off the tree.
Wow.
Like that's how lazy I was.
Really?
But when it comes to Christmas, right? What makes me happy, because I have, you know, a stepdaughter, nieces and nephews, I like to buy them a bunch of stuff. You know what I mean? What gets me gratification is seeing that my little niece is very happy when she opens the things that we get her. But we don't spoil her. You know, she's a good kid, and she's earned all the stuff that we give her.
Yeah, she values.
Yeah, exactly.
You know, it's funny. I was driving into work, and I was listening to some Christmas music, and I don't normally do that, but it kind of put me in a good mood. You know? Yeah, I don't know. I don't know. It's one of those things, man. It's like a timing thing. Like, you don't want to listen to it every day, but I started listening to it, and I had my son in the car with me, and yeah, it's cool, man. Christmas, it seemed like it started earlier this year. I don't know if it's because everything going on. Yeah. And I think a lot of people want to feel positive, and I think that's why I listened to it this morning, because I want to feel positive. So
let me ask you this: this year, so did you get a tree, and do you have your tree up already?
There's not one year I did not get a tree and put lights up. Really? Put a wreath up. Yeah, I mean, you gotta look, man. It's culture. It's, you know, everybody doesn't have to follow that, but you know, I feel that there's nothing negative about it. So why not do it? And it makes me feel good. I got kids. I got nieces and nephews. So yeah, I want to enjoy it with them, you know? Gotcha.
Did you already do your Christmas shopping?
I've done about half. I got a few things still to buy for sure. I'm not quite finished up, but I have a lot of my shopping done. What's cool about it, though, is that you don't have to go into these stores, and it gets cold here in Vegas. You're not trying to, you know, this year I didn't try to go and do Black Friday and do all that stuff, because that's just too much chaos for me. Yeah. But a lot of the stuff's online. So it just, you know, everything's delivered. Not just Amazon, it's everywhere. You know, you can get it. Every store is just boom, you know, it's coming out quick. So I've been doing that. A lot of online shopping.
Do you not like to fight the crowds?
No, I mean, like if you're going to get a deal, like a real good deal, I might think about fighting a crowd. You know, like I'm getting like a $200, you know, 85-inch TV, something like that. That's probably that's not even gonna happen. But
I don't think if it's even like worth to go.
But
through
let me
that
say
whole
this:
trouble,
if there's
man, that's
something
crazy,
like
dude.
that and it's only on one day, I would think about it or consider it.
Yeah.
Anything other than something that's exceptional, probably not.
Yeah.
Probably not.
So you're pretty much almost done.
Pretty much.
Are you gonna tie it up this weekend?
I'm gonna try. What's funny is in my family we have about 7 kids.
Yeah.
That have birthdays.
So do you feel like you have to buy presents for all of them? And how do you do you make it even between all of them?
Yeah, I mean, I try to give a certain amount I'm going to spend.
Or is there one kid that you spoil more than the others?
Yeah, it's like there's one kid that I really like and I don't like the rest. No, I'm just like, yeah, I evenly do it.
Yeah.
Basically what I do is I want to make sure I can leave a good impression on them. And when I was a kid,
yeah,
I remember getting toys and stuff when I was from my uncles and my aunts and everybody. And it's weird, but you remember that stuff because it's like, man, they took that time out to go buy me something like that.
Yeah.
There was one year, dude, we got like some carom board and something else. It's like an old school type pool board. But, you just remember that stuff, We used to get, remember Duck Hunt on Nintendo?
Dude, that was the game.
That was the game,
boy. Let me tell you.
And TurboGrafx 16. That's like everybody's like, what the hell are they talking about?
Yeah.
But my uncle, what he did is he put us on we had like a little map to find it. It's kind of cool, man.
Oh, that's cool. So you made it like an excursion for you guys.
Yeah, it's like it was like a real. It was weird because I found the note, and then every time you go to the next spot, it'd be another note. So that
was creative.
Very creative.
You know what? That's what's really cool about that. He was actually creating memories.
That's exactly what it was.
Yeah.
And that's what I'm trying to do with, it's a little bit, not, I wouldn't say superficial, but I mean, not many people want to do that these days. A lot of it's technology and it's like, everybody just kind of like, hey, it's a custom thing for everybody just to get a gift. But I think you kind of put a little love into it when you do stuff like that.
Isn't it crazy as you get older, your mindset starts to change and
100%.
you start realizing like things that were important, like you don't even really care anymore.
Yeah,
you know what I'm saying?
100%.
It's just weird. So it's like I'm to the point in my career now is just like I just want to be happy, and I also just want to create memories at this point.
Yeah, and I always say like everybody wants to be successful and follow your dreams, follow your goals, but you can't keep it when you're gone.
Yeah, that's true.
And so, you can pass it to your family and whatever you've accumulated, but
all I know is I'm taking my shit with me.
You're gonna have it buried with you?
All of it.
All the gold?
All the gold. So I know that you got a couple notes here. What you got going on the financing world? What's going on?
So you
want to
talk about that right now?
Yeah, let's talk about that right now.
All right. Well, let's talk about it. So rates, we all know rates are going to stay pretty good here. Even going into 2021. One of the reasons is the government right now is buying about $140 billion in treasuries. They're also buying in mortgage-backed securities and bonds, notes. What they're doing is the Federal Reserve is buying these notes from the government. So the government's got to make its money.
Yeah.
So they're selling it, and they're gonna. That's really when you buy these mortgage-backed securities. What happens is that the actual return or the yield on those stay low.
How low? Like 2.
Well, I mean that's why.
Right?
Yeah. So they're keeping the rate of return low.
Yeah.
Which ultimately keeps rates low, and so. Going into 2021, we're probably going to see rates not really change much, maybe go up a little bit. A lot of forecasting going on right now with what's going to happen in the market. I've read some things out there that we're gonna drop about 6.5% by August. Don't know if the data is supporting that. Also, when you look at just the direction of what new home builds are doing, they said that right now, new homes are kind of slowing down, and it's because of higher prices and really just lower demand at this time. And they said it might be slowing down into next year as well.
Well, I think it's going to pick up just due to the fact that the new county guidelines, right, has increased, which now puts new homes back into play.
There you go. But I'm just, like I said, I'm just reading this stuff. I don't know if that's going to happen.
Well, here's the thing. We don't know what's going to happen.
No.
We don't know where that pendulum is going to go left or right. It just goes back and forth. We just don't know when it's going to stop.
They also extended,
the
eviction
until the
March
15th, or is it the end of the...
No, it's till March 2021.
Okay.
Okay, so anybody out there?
Was it? I thought it was until like March 15th, or is
No,
it
it was
until
until-
March 31st?
I think it's till March 31st, and it was in October.
Is there 31 days in March?
Yes. So I think so. Here's what's going to happen.
Yeah.
Everybody's waiting to see who's going to get evicted, and is it a good time to buy an investment property? And with all these things happening, who knows? I mean, if these things start to turn in the direction of going the other, where people are starting to get evicted, and then people are having problems, then there might be an opportunity. Everybody's like, well, is it a good time to buy an investment property? I don't know if property. Maybe it is, because what if prices keep going up, and then you're just kind of, hey, I didn't get it while it was hot.
Well, it only depends, right? Based upon the type of investor you are. If you're looking for cash flow, based upon the median price point or the average price point for a home and what you would get for your mortgage, if you leveraged it out, it doesn't make any sense at this time.
I mean, across the board, if you want to talk about mortgage applications, purchases, refinances, I mean, they're just, you look at year over year, it's like 100%.
Yeah.
As far as increase is, we've doubled.
We've
doubled.
Haven't
in
we
refinance
increased,
mortgages?
Hasn't the mortgage industry increased like 14 times or 13 times or something like that? They're saying
It's basically the same numbers we did last year. It's like double, I think, this year over year. So
that is crazy.
We crushed it on refis. Everybody did.
Yeah.
And it's because rates are low, and it will continue into 2021 and into 2022. So what came out was that they're going to slowly, come out of that buying, bonds and mortgage-backed securities, and the government's going to kind of slowly come out of that, where they're buying into that. And so by 2022, they're saying that we're going to be more of like in a freelance market. They're thinking that, I think the second quarter of 2022 is going to be a normal market at that point. And they feel that the economy is going to be back to full strength.
Yeah.
So what does that mean to everybody out there? We're going to probably see a lot of just slow growth, slow process of next year.
Yeah.
Rates aren't going to really do much, right? And the housing inventory may keep going up. It may correct itself. They're talking about that it might become a buyer's market here, potentially. So it's hard to see, but I mean, if prices keep going up and people don't want to buy, all of a sudden more inventory comes on the market. A lot of people right now, at the end of this year, we see that retail sales and a lot of gross domestic product and data that's coming out, people aren't spending their money. So inflation, if you look at it for the last 4 or 5 months, it's been roughly the same.
Yeah.
And that's a big indicator on what's happening, because if people are spending money, right? Obviously inflation is going to be higher because people are out spending money, and it's just dollars in circulation. And so I think, going into next year, we will see that inflation will start to go up a little bit. We will see some economy, pick back up. And I think you're going to start to see some recovery signs. Everybody getting back to work. But the big thing for here is unemployment. What are people going to do?
And unemployment right now is just a little bit under 15%. And we know that casino and hospitality, right?
That's a big thing, and that's where they were saying that Vegas, they're surprised that Vegas didn't get it hit as hard.
Well, and the reason why, let's take a look at this. I mean, rates are still low, but every other city, right, their homes are so expensive that people can't even afford a home.
Yeah.
And you just talked about hyperinflation. So that's the reason why people are coming out here. And what I mean by hyperinflation is, if you take a look at properties out in California, right, they're getting taxed, right, like crazy. Home pricing out there skyrocket. It's overpopulated, right? So what's the next best thing? Vegas.
I mean, look, you look at Phoenix. I think I looked at Phoenix, Colorado. Seattle's doing well. All these cities.
Idaho is doing well too.
Yeah, all these
Reno's
cities,
doing well.
They're all just
Florida.
Florida's doing well.
I can't believe it, man.
Yeah, and it's like 27%. And the only thing, though, is that all of these cities have one thing in common, or a lot of it is low inventory.
Well, and you know what it is Feds are printing way too much money, and we're having hyperinflation, because here's the thing. Rich people got to park their money somewhere, right?
Yeah.
If you take a look at every single asset class right now, it's overinflated.
Yeah.
My question to you is that, look, would you rather have money in the stock market, or would you rather have money in real estate?
I'd rather have money in Bitcoin.
Yeah.
Did you see the numbers on Bitcoin?
Did we hit 20,000?
We're over that. I'm going to say something about that. So
yeah,
consumer confidence is the big thing in that people invest in that because they feel that they're confident that that's going to be some type of return. Some people just, they put in money into it and they don't know what they're going to get out of it. But I was looking at some data. If you go back in March, I think it was right around 4,000.
Yeah.
If, it's increased over 20,000.
Wow.
And so in a short window, I mean, you could have made it could be upwards of above $100,000 if you invested back then, but nobody knows.
Yeah.
But there's a lot of confidence, a lot of money going into Bitcoin right now. Really all the, all of that style, like, what is it? Litecoin, what is it? Litecoin or?
Well, I mean, there's so many Ethereum and all that stuff.
Yeah, it's just everybody.
Look, at the end of the day, there's so many coins, and it just comes down to consumer confidence.
That's it.
I just feel like, look, is it a great investment? I would say probably yes, but I don't think it's just there yet because you can't trade Bitcoin with everything right now. I mean, even you look. Somebody just sent me an email today and said, "Hey, Chakits, can you actually buy homes in Vegas with cryptocurrency?" Nobody out here is accepting that. It's too much of a gamble, dude.
It's a gamble, but I think from what I was talking to a couple of people, and actually I'm looking at this guy right here. He just put this, I don't know who King is, but 13%. There's some interest that you can make off this Bitcoin now.
Yeah.
And so I think maybe people are looking at it as a good place to stash their money as long as things keep going up. We know right around Thanksgiving, it went down to roughly around 15,000, 16,000.
You think it's like a pump and dump?
I don't know. I mean, like you said, it's consumer confidence. If it continues to go up to, people are saying it's going to go up to 50,000. I mean, who knows? I mean, it's already.
They were saying it's going to go up to $1 million.
So we'll wait to see what happens. Stock market's doing well. I think I
can't believe the stock market hit over 30,000 points, dude.
Yeah,
that is insane.
Well, and also too, a lot of these. What the people in my sphere and people I talk to, I kind of get a little bit here and there. They're looking at companies that are too big to fail.
Yeah.
They're going to invest money. They might not make a huge return, but
why? Because they know they're going to get government bailout. That's the problem.
Yeah, I mean, and also chances are, just like you said, it comes back to confidence. People are going to invest, but some of these companies, for instance, like the vaccine.
Yeah.
If you invested, there's a stock for the vaccine.
Too late for that now.
Well, and that's what I'm saying. If you invested into that might have gotten you a nice return. Will it sustain itself? Who knows? Maybe you'd have to sell off quick. So I don't know. There's a lot of things out there that you can look to put your money into. But for us and putting it into a house and investing money there, it's another risk. But is it a risk that we would do it in this market?
Yeah.
I would think so. And here's what I was reading about that was investment properties. Let's say that you don't invest now and you're thinking that the market will collapse. Well, what if it doesn't, right?
Yeah.
I don't think it'll ever go back to 2008, 9, and 10, obviously.
Yeah.
But could we see a decline here, 6.5%? Maybe. Who knows? But still, if you put your money into an investment property, unless it collapses altogether, you're still going to get a return.
Well, if you buy, right, in today's market and you still can cash flow, even though the market tanks, you're still good because here's the thing, you're still making money off of that. And typically investors that look for a certain ROI, the equity position is only the gravy on top. They never really focus on the equity position. It's always cash flow.
Yeah, it's always cash flow. And but
I'm just saying, it's very hard in today's market to find something that's going to cash flow. The only thing or the only type of properties that I've seen that you could literally make money off of cash flows are properties that were built in the early 70s, right? That need some work. So you would be buying it, right? And you would have to rehab the property.
What about the commercial sector? We had Colt come on one time. What are your thoughts on investing into that?
Well, I literally just spoke to Cole today because, I'm trying to work with Cole right now to buy a 30-unit apartment building. And there's just really nothing out there that makes sense because in 2013, 2014, 15, a lot of them have scooped up these apartment buildings, right?
Yeah.
And they're making such high yields on the cash flow. They have all this money in the equity position at this point because they raise the rents, right? And the problem is that there's nothing out there to do a 1031 exchange because everything is just way overpriced. Now,
so they're just stuck?
So, yeah, they're just stuck. So your money's stuck. So they're making good money, but as far as the reposition, it is very hard to reposition right now. And I think a lot of investors are kind of in that boat. And what's happening is when you have investors in that position, a couple things will happen. And this is starting to happen to me, right? I'm finally in a position in my life where I'm able to save enough money where that I'm ready to roll the dice. But there's just nothing out there for what I want. And the problem about this is I'm getting very anxious, right? Like I want to make a move. And when you're in that position, what tends to happen is you could be making bad moves.
Yeah.
Because you want to get something because, it's getting itchy, right?
Mm-hmm.
So those are one of the challenges that I have found.
Well, so if you go back to an average person out there trying to buy a house or look at buying a house or investment property, if you're a commercial investor, there's somebody you can talk to on the team. But, what I get a lot, and I've had this recently, is where people are asking me, well, what can I get at $1,500 a month or $2,000 a month, right? And I'm just saying this because I've had quite a few people call me and talk to me about this.
You can't really get nothing.
Well, and that's the thing, and I want to talk about that. So what you have to look at is if you're really wanting to invest your money, let's say you live here, let's say you're not selling a house in another state, or you're not coming here, with a nest egg of money to invest into a property. I think you have to look at, well, what is my options? And a lot of times when you're at that 200 to 300 range in purchase price, 200,000 to 300,000, you're looking probably in a good location at a condo or townhome. Is that not true for the most part?
You couldn't even get a condo or a townhome anymore for that kind of price.
So let's say that prices though are in that range for condos and townhomes. Where we were going with this conversation when I was talking to them was, well, if you have an HOA that's $200 and you're in a location that's not as great, would you be willing to go above if you could? Because everybody wants to be comfortable, and I get it. Yeah. But you may not be able to buy and be comfortable because of where this market's at now. Yeah. So when you look at condos and townhomes and all these things that's happening, and really what the opportunity is here, you would probably be better off going at like 350 and not paying a high HOA, because you have to put in perspective. And if you go there, you have an HOA, SIDS or LIDs. Sometimes it's a little bit harder to get the financing, and the rates sometimes a little bit higher on condos.
So here's the thing. If you're looking at $1,500 a month, right? Now, that was your budget, $1,500 a month. You're probably going to qualify, let's just say, probably about $300. And this is just principal and interest. So let me just show you what's going on here on this display here. So this shows you on lvhomeexperts.com, which will give you a cheap generic plug here. $350,000, right? This is what you get, and your payments are going to be roughly about $1,643, depending on your down payment, credit score, and interest rates and all. So this is just kind of give you a general idea. I mean, I guess this property's not that bad though, right, Dan?
I mean, it's not bad, but what people I think have a perspective is that they want to stay at that $1,500 range. If you're looking at putting down the minimum down payment at a $350,000 home, you're probably going to have right around a $2,000 mortgage.
Well, I mean, this is not that bad. I mean, let's take a look at this one. This one was just listed, $350,000, right? 4 bedrooms. Oops, it looks like I got to enter some information here. I'm not going to do that right now. So this one is 4 bedrooms, 3 bathrooms, 2,200 square feet. Was built in 2006. So I mean, this is not bad.
It's not bad, but see how it says mortgage on there, $1,600. Yeah, they don't always counter in or
taxes and insurance. Right. No, you're absolutely right. And this is just to kind of give you an idea. This is just principal and interest, and also there's mortgage insurance premium. Do you want to go ahead and explain mortgage insurance premium?
Most people know what it is, but it's basically an insurance. It's mortgage insurance to protect the lender. Yeah. In case you default, so then they get paid. There's another insurance, which is, I call it hazard, because you have home insurance, which protects the house. But it's just, you got to be realistic, and you have to pick your spots and pick the battles that you want to go into. And when people are looking to buy a home today, I see a lot of people have a certain threshold, but you may not be able to buy what you think you can buy. And I get a lot of frustration from that. And it's unfortunate, but that's how this market's gone. It's just gone crazy.
So where you need to start is actually go to lvhomeexperts.com and click on the financing. Again, a cheap plug. Start that loan application. The reason why you want to do that is you want to see exactly what you're going to be approved for first. And based upon what you're approved for, you know what your payments are. then now you can start looking at homes at that price range. Then you can kind of gauge and see what's out there and what you can actually get for your money.
Yeah.
Wouldn't you agree?
I would agree. And I think that when you look at there's a lot of moving parts, right, to loans. There's a lot of moving parts to getting into a house. People don't understand, like, well, you know, what is the challenge of moving from state to state? What is the challenge of putting down a certain amount of money? If I have to buy as a second home, how much do I need? These things are answered. And so, you know, everybody's got a different threshold. It's up to you if you want to buy a home. You know, they're talking about, you know, it's going to be a good market to rent next year if you want to buy an investment property. Yeah. The reality, though, is there's a lot of different parts to buying a house, and it's a starting point. I've had some people just go in there and fill out the information to pull credit. Yeah. So it's a great starting point. It's a great opportunity to kind of see where things are at, and there's no cost. You know, today somebody asked me, "Hey, what is the cost to get all this information?" It's like nothing.
Free 99.
It's free 99.
That's
the reason why.
Free 99.
Free 99. The reason why is because we're obviously, as a bank, we make our money when we close our loans. Everybody knows that.
The average price point for a home right now through the whole Las Vegas or across the Las Vegas Valley is $434,206 at $191 a square foot. Average days on the market is 35 days. What do you get? Roughly about 2,200 square feet, 3 bedrooms, and 2.5 baths. So let's take a look at that. We know the median price point is around the the 435. And let's take a look exactly what can we actually get for your money in today's market. So if we take a look here, this kind of gives you a general idea. Again, just principal and interest, about $2,100. You still got taxes and insurance and mortgage insurance premium. So all these homes that you see here, again, with a cheap plug, lvhomeexperts.com. And these homes are not bad for at this price point, but now it just comes down to, are you willing to pay about $2,500 a month for these homes?
Yeah, and I talked to somebody today about that.
I mean, that's not bad, though. I mean, these are some pretty decent homes. You know, one of the challenges that I'm having here now is that a lot of people will watch my YouTube videos, and they notice that the modern homes, a lot of people that fall in love with that. And when they go and take a look at these resale homes, right, they're like, no, I don't like it. I just want a modern home. Look at this one. This one had a price reduction here. Rose Ranch.
I know where that's at. You go play golf up there, don't you?
Yeah. Guard-gated community. All right. Nice golf course.
Yeah.
You got that Tuscan vibe. Look at this. This is a pretty nice kitchen, huh?
It's very nice.
$445,000 for 4 bedrooms, 2.5 baths, 2,500 square feet. Lot size is a little bit narrow, but hey, that's okay. Now, what I do like about this community is that you also got a rec center too as well. What are you cracking up about?
We got some advocate people on Bitcoin over here, man.
Oh, yeah. It's probably Brett. Let's skip those Bitcoin questions.
Yeah.
Let's answer some of these questions. What questions you got, Dan?
What questions do I have?
Yeah. I mean, not you have, but the audience.
What the audience has. Okay.
Yeah.
So
let me scroll back all the way to the top.
Yeah, let's go for a few of them. So let's take a look here. Let's see. We talked about Bitcoin. I'm on disability. Any chance I can get back into a house in Las Vegas, Henderson, North Las Vegas? Absolutely.
So you guys accept the disability checks, right?
Yeah, if they have disability income.
Yeah.
Yeah, long-term disability. Yes, we can help them. Also,
what's up, Hoyen? What's up, Jay? All right, what's the next one? What do we got here?
Let's take a look at one. Low interest rates, yet extremely high prices. California prices are a joke. I would agree. I think California is way inflated as far as what their prices are.
Why is it inflated? Probably because the population, I think it was like 40 million or something like that, California.
Yeah, and I think, don't you think taxes and or the reason why people are leaving, it's taxes, the cost of living's too much. And I mean, they're trying to, there's like a video I think I watched that was like about people.
They suck the life of everybody out of there. It's crazy.
Any way they can get money from you leaving. I think it was like.
I hope that doesn't happen here, man.
Yeah. So let's keep going down.
Congratulations to somebody who ever bought a Par D home for $470,000. Nice. Congratulations on that.
Yeah, that's good. Everybody.
Washington State and Oregon home pricing are a joke. Let us know in the comments below what the median price point for a home out there in Oregon. I'm sure it's pretty expensive.
Yeah, so this person said, I thought this was a financing and real estate show.
It is. Why?
I don't know, because we were talking about Christmas probably.
Well, it doesn't matter.
I know.
We talk about whatever we want. Now, here's the thing. If you have a question, just go ahead and...
Keep scrolling down. There was some other questions.
Okay, let's see what we got here.
470 home in Texas will have 10 a year in property taxes. So that person's saying that basically...
Oh, so that's where they're getting killed. The good news about here is that sales tax is typically property taxes is typically about 1% of the total.
Isn't that going to go up though?
Well, the most that they can raise that, and this is great, is only 3% on a primary and 6% on an investment. However, how to get rid of that 6% on that investment, what happens is every year you will get a letter from the Department of HUD, right? From HUD. And basically, if your rents are at fair market or at below, they won't raise the taxes.
Yeah.
So it's like almost the government is regulating you as a landlord to say, look, if you want to raise your rents, that's fine.
Yeah.
But we're going to tax the shit out of you.
Yeah, it's crazy.
I think that's bull crap, man. That's bull.
It's bull. I was going to tell you, yeah. And also, you know what's crazy about here is that it just seems that there's an opportunity. It's like, I think a little bit more obviously for people that come here and they got money, like cash buyers. How many people do you have come here and buy cash?
I have quite a few. I would say it's going to be probably about 35% of our closings. But what I do find fascinating is these people that come in and
even with the higher prices.
Yeah, right? With the high. Well, check this out. A lot of people got a lot of money. A lot of money in savings. I can't believe it. Like the people I'm dealing with are not people like it was like 8 years ago where they're barely scraping by, right? To buy a house. I'm having clients dropping $400,000, $500,000, $600,000 and only financing like $200,000.
And
that's crazy.
When you think about that, imagine if
that's hyperinflation right there, dude.
Yeah, imagine if that money was around. Like, remember when the properties were like 100,000? I mean, you could buy like 5 or 6 properties with that. But how much? I mean, if you had that's one property they're buying with that.
Yeah.
Wow.
That's just crazy.
Yeah, and then obviously they got some money coming here. I think a lot of people selling houses in other states, coming here.
I had a lady that contacted me the other day. She had like 700,000 cash.
Yeah.
What she did, she's from California. She sold her house, made 700,000. She's like, I'm coming out here. I want to buy 2 properties, one as a primary, and one as an investment. I said, man, you're not gonna get an investment property for like 350. What kind of returns are you looking for?
Is there a point where it's like you have to have that conversation where it's like, look, I hate to say this and we'll still try to work with you, but you're really what you're trying to get is not available, and it deters them to go to another realtor or say, I'm frustrated.
Well, they can all they want, but here's the thing. I don't have time to waste, and I'm not one of those agents where like, yeah. Oh, this is great investment property. Look, that's not how I run business. I just tell you how it is. You tell me the type of returns. As soon as I ask them that question, they're like, what do you mean by the returns? And I explain to them, you look for a 3%, 4%, 5%. I don't understand what returns are. So basically, it's how much money's coming out of pocket and how fast you're making money off of how much money's going out.
There's one question I want to talk about. So one of the questions was, I'm buying a new home, or they were interested in buying a new home, and they were asking about using the builder's lender. And is the incentives worth it? Hell
yeah, it is. It's always worth it.
So here's what I say: is it's everybody's different, right? So if you look at the long term of things, and you see the fact that there's on a better rate, you get a lower payment. See, we're not talking about $200,000 or $300,000 homes today.
Yeah,
we're talking about a lot of it's $500,000, $600,000, $700,000, $800,000 purchase homes. A lot of those loans are high. So on a loan that size, it plays a bigger part to have a better or lower interest rate. So if you're out there and you're looking because you don't have assets, everybody's different, then I would definitely consider it. And this is just my opinion.
I don't always agree with that, but go ahead.
Well, let me say this. So that's one. Secondly, you have to see what each lender's charging you, right? So whatever the lender fees are.
Yeah.
And so I think those are the two things you have to look at, because a lot of times some of those builders, they do give really good incentive and good rate.
Yeah.
Some of them,
I mean, you can't beat them all the time.
yeah, you can't beat them all the time. But in some of them, they give a lot higher origination fees.
Yeah.
And they're trying to make it up sometimes on the sale of the home. It just depends. So I think it's more of a case by case to answer the question. But what are your thoughts?
My thoughts is always go with the builder. Screw Dan. He sucks. He can't get you a deal. Nah, this is how it works, actually. The first thing that you need to do is you got to go on the outside source, right?
Yeah.
And you got to get with a broker like yourself. And the reason why is because, so that way you can kind of see what the fees are.
Yeah.
Once you get that, you get the lending estimate. Then once you go to the builder, right, they always try to entice you, the builder, say, hey, if you use our lender, which we own the lending institution company, disclosing it right now, right, you're going to ask for a lending estimate. Because sometimes what happens is they'll give you that $6,000, but the fees are a lot higher on the back end. So basically it's washing out, but your interest rate is about, 25 basis points higher. And you didn't even know that, right? So that's why you have to compare apples to apples. Not all the time, clients that I do send over to Dan, they go with Dan, because when we look at the lending estimate, sometimes the builders, they actually beat out Dan, and it is what it is because it comes down to money. But now there's situations like we just had this one situation with a client. They love Dan. They want to work with Dan. Dan structured the deal, had problem with financing. And this is what kind of sucks for Dan, so I kind of feel for him on this, where, he's worked a file, couldn't get approved, but he was able to coach them months in advance and say, do this, I'll get you approved. Build their credit, structured the deal, got them approved, went to a new homes track, right? They gave a better incentives as far as closing costs, but Dan had a lower interest rate, but they decided to still go with the builder, right? Because they came less out of pocket, out of money. So how do you see what is better? Should I go with the builder or go with the lender? So the first thing that you really should do is once you get that lending estimate, you're going to take a look at the lender's estimate, right? At that builder. You're going to see what they're charging you as far as fees. Now, if their fees are more money, that's fine. And if Dan's interest rate is lower, right, what you're going to do is you're going to figure out what the difference is. Let's just say it's a $6,000 difference, but Dan has a lower interest rate. You need to figure out how much money you're going to save every month if you went with Dan. Then you're going to take that number divided by the $6,000. That's going to tell you how many months you got to stay in the property to break even. So if you know by doing those numbers, let's just say the numbers are 5 years that you have to stay in. So now you have to ask yourself, are you going to live in this property more than 5 years? Then the next question is, do you want to pay for the money up front in the front end, or you want to pay on the back end? So 9 times out of 10, they'll end up going with you because they know that they're going to stay in the property for more than 5 years.
Plus, that's
what you got to look at.
That's a good point.
I don't know if I broke it down.
No,
correctly.
you did a good job. But I also say that who knows where rates are going to be at in a year.
Yeah.
So if you're at historic lows and everybody's freaking out about it, well, who's to say that in 6 months or a year that rates aren't up to 4.5%? That opportunity that you had with me,
I don't see it going up that high, dude.
Well, listen,
there's no way.
As this thing unfolds, I don't think so either. But what I'm saying is, if somehow it's 5 years, right, and you're thinking, well, should I make that and should I pull the trigger on it? My thing is that if you have rates that are low and they're there and it's in front of you, take advantage of it. Why? Because you don't know if it's ever going to be there again.
Yeah.
If you have an ability to buy down the rate and you're getting like a 2.5 or 2.2375 rate or whatever it is, take advantage of it, because yes, I know everybody's seeing rates at this low. I don't think they'll ever increase drastically, but you might not have that opportunity again. And if you're thinking about refinancing in 3 or 4 years, maybe rates will be higher. Who knows?
Yeah.
So I don't know. I just take it while I can, while it's in front of me type thing,
Any other questions that we have on here?
Let's take a look. Everyone just thinks 470,000 in Texas buys a mansion, but those are in fact just regular cookie cutter track homes.
One thing that I do want to mention, like this person talked about in Texas, homes are at 470.
Yeah.
But also taxes are $10,000. That's double the amount. So let's just say ours is expensive, but then you also got to look at the property taxes too as well.
That's just exactly what I said. It's comparison to what I just talked about with buying a home, at 250 versus 350, because you may want to just say, does it all wash out in the end? Is it very comparable at the end?
Yeah.
So, see, I don't know. Let's take a look at property taxes. And we talked about that. Well, let's talk about this one. Property taxes in places like Houston or Dallas. A lot of people from Texas, I guess. A lot of questions.
Yeah.
Here. Outside those areas, it's affordable, like Corpus Christi. However, don't forget about school taxes. Huh. So they must have school.
Oh, so they must be getting taxed
double
like
taxation.
Crazy. Thank God we don't pay the state income tax.
Yeah. Let's see. Another Texas question. Let's kind of see what else is out there. For new homes, does it make sense? We talked about that. Let me see. I don't know. I don't want to talk about nothing about politics here.
Oh, it says, chakits, is this correct that the builder's lender is hard to beat, especially if they offer...
That's what we just talked about.
Okay, what did they... just retyped it then, huh?
No, I was reading it earlier as you were scrolling down.
Gotcha. Oh,
Yeah.
There's one thing that I do want to talk about. Today, we went out to a new village. Look how handsome he is. He's so handsome.
Yeah.
Look at that merch, man. Don't forget to get that merch, support the channel. So there's a new village, right, out in SUMMERLIN Master Plan community. It's called Red Point, which is located on the west side of the 215, right next to Far Hills. And there's a bunch of developers going out there. So we talked about this early bird gets the worm. So I am going to have a video released next week, probably Wednesday, for all new developments out here. Okay. And some of the builders that we're going to have here is going to be Woodside Homes, Toll Brothers, Taylor Morrison, Lennar, Pardee, and Pulte. So home pricing range is going to be around the 300 range, all the way up to 2 million or even more. Isn't that crazy?
That is crazy. I have somebody here saying, VA loans, do you do them? We absolutely do them.
Yeah. You know what? That's funny because sometimes I get calls and buyers will say, Chuck, do you do VAs? I'm like, dude, that's like the easiest deal to do.
Well, it's the most lenient.
Yeah.
A
lot of people think it's hard, and a lot of agents don't even know how to put these deals together, believe it or not.
Actually, I love doing VA loans. I actually have a lot of people. So there's a lot of realtors that get business from, I think it's called USAA.
Yeah. Where they pay a fee.
But they pay a fee. And
that's crazy.
Well, a lot of these realtors, what they do is they don't have, they just have maybe not the greatest experience. I don't know what the situation is, but I get a lot of business from that.
Yeah.
Because a lot of people are like, hey, can you close this quick? A lot of it's just.
So no, they're good, man. Their rates are good. The problem is that the person on the back end, the lender, they're not really making that much money versus a mortgage broker. You know what I'm saying? They have more incentives as far as getting the deal closed. And could that mess you up as far as you're under contract, you're trying to close it within 35 days? Yeah, you can. So that's why it's so important to find a great lender. You know what I'm saying? No,
it is. And I think a lot of the VA has a stigma out there. Mm-hmm. If you got enough fleet time and you qualify and your eligibility is there and it's intact, it's a misconception that when you have sellers out there and they're looking at VA loans like, oh, those are like the worst loans ever, and let's not accept those offers, the ones that are selling their house. And I think some of these selling agents coach that.
Yeah.
But what it really comes down to is that if you have all of this in place in the beginning, it's about ordering the appraisal, getting the certificate eligibility. There's no difference in time frame. It's just, I hate to say it, it comes down to the loan officer. The loan officer is just delaying, and it's not probably as efficient as it should be.
I don't know how true this is. A lot of lenders do not want to do VA loans.
Oh, no.
No way. You know why? VA loans are like, that's guarantee getting paid, right? As a lender.
No, I mean, look, it's still a loan, but it's got to meet the guidelines. But like I just said, I don't think that a lot of lenders understand how to be organized up front. A lot of it's the preparation, ordering the appraisal. The appraisal on a VA loan takes a little bit longer in most cases.
Yeah, because there's not that many appraisers out there that specialize in VA financing.
There's situations where there's VA underwriters that will help you get a loan if you're a veteran out there. Like you have to have a place to live. I had somebody overseas and he wasn't going to be in the property, and they're like, well, how do we call it a primary residence? And I, sent a letter into the VA department, and they're like, he's got to have a place to live. And so they ended up approving that deal. But there's other situations where they won't approve it. And so for the most part, where I'm going is VA loans and the VA department wants to help out veterans.
Yeah.
So it's the most lenient. It's the best loan program that's out there, in my opinion. It gives the best interest rates. I would recommend them all day to do that.
Really?
Yeah.
All right. What else questions we got?
Let me take a look here. Did you already answer that one? Do you think residential areas of Paradise and the lower income areas of North Las Vegas, I don't know what that is, will gentrify because of their central location?
Well, I don't know, man. Pricing has gone up across the valley. I mean, if we take a look at the Paradise area, you're at what, 100? What do I have for my numbers here? Oh, you know what? I can't.
It's basically saying is it gonna have accessibility, and is it going to be in a central location, accessibility to the highway? So I'm not sure about that.
Yeah, I'm not too sure, but we're at what, above 250 in those locations, unless I have my numbers incorrect. Looks like somebody erased my stuff. What the hell? Dang. What are the questions we got here?
Oh, let's take a look. If you would,
I'm trying to collect some data, so do what you got to do. Trying to get some data right now.
It says, yeah, we are on our second home. We used a VA loan both times, but we dealt with discrimination against our loan type before. I don't know. That's
know anything about that. Yeah.
Very sorry to hear that. Let me see. What else? In a hot market, good luck getting an offer accepted when you disclose you are coming in with a VA loan.
No way. That is not true.
Look, listen, it's going to come down to the way the realtor writes the contract.
Yeah, you got to write a clean contract, dude.
And also, though, here's what happens. So on the seller side, they call me and go, Dan, how good is this buyer? He's VA. I'm like, look, a lot of my VA buyers come in better than my conventional and FHA buyers.
Well,
so,
it's not even VA buyers. It's how you structure the deal. So when the offer goes out, the agent should automatically CC the lender on it and explain to the selling agent or the listing agent that my buyer is fully conditionally approved. Should you have any questions, feel free to reach on out to my lender. Here is his number. At that point, the lender should be contacting or doing a follow-up right away with that agent, so that way they can explain the conditions to the seller.
Yeah, and I think that it's weird because there's a misconception that, like I said, that everybody thinks that VA buyers aren't qualified or they're less qualified. So it's like you're not putting any money down. So and then all of a sudden you look at these VA buyers and they got 800 credit scores, money in the bank.
Not only that, they can go up to $1 million.
They're taking advantage of just getting an opportunity because they serve the country. So for me, anybody out there that's a veteran, come talk to me because I'll help you. And also one of the incentives that we have at Guarantee Rate is that we don't charge any lender fees. It's a free loan.
Yeah.
You still got to order an appraisal and have a home inspection, but that's a paid outside closing cost. So, I would do it. Anybody wants to see me for VA financing, come talk to me. But you look at a lot of people out there that just look at these different loans. They really don't understand how that all works. And I think that's where it's the unknown.
Yeah. The misconception.
Yeah, it's a misconception. It's the unknown that I don't really know how it all works. But, history just told me that VA loans take 45 days to close. But that, again, it comes down to who you work with. So
check this out. I got some numbers and some stats. So if we take a look at VA buyers right now, you have a total of 11% of the marketplace. FHA buyers are 20%. Conventional buyers are another 20%, and also cash buyers are only 17%. So what this tells you that you're a conventional buyer, you still can beat out a cash buyer. And from VA to cash buyers, it doesn't really make a difference. Like you said, it comes down to how you write up the offer.
Yeah, so let's go into some of these. What areas of Vegas do you think are best for buying rental properties?
When it comes to Las Vegas for rental properties, I never focus on locations because if you take a look at my locations, you would think these places are a war zone. What it comes down to is figure out what type of investor are you? Are you looking for cash flow?
Yeah.
Or are you buying based upon speculation and growth and development and, like for the near future, right? So, if you're buying based upon speculation, then you're going to buy more in a, nicer neighborhood, but then you're gambling at that point.
Yeah.
For me, I'm always buying based upon cash flow. It doesn't matter where it's at, as long as it's giving me the yield that I'm looking for.
Yeah.
That's all I care about.
So let's read. Oh, he said, LA Shadow says, let me see. No one is saying that VA buyers are not qualified. They typically have easier income to qualify. Be honest, though. Some sellers will not entertain on an offer with a VA loan.
Bro, This show is always honest.
Yeah, I'm going to be honest. That's true.
Look,
that is true. That's what I'm saying.
Bro, give 100%. Me a call. I'll get you in the contract.
But what he's saying is that sellers won't entertain it. And I've dealt with that problem. And that's why I'm bringing it up, is because
the problem is that people are just not educated. Just because you have a VA buyer doesn't mean they're not going to accept your offer. If you go in and you structure the deal correctly and you explain to the agent of what is going on, you'll get the deal done. Those deals are going to be a lot easier than FHA and also conventional deals.
And I think this market's headed for VA buyers that they're going to benefit too, because as the market goes up, so does the county limit, which obviously there's not a county limit if you can qualify up to that $1 million.
Yeah.
Obviously there's a cap of $1 million, but then you can even put money down and go higher than that. But you know, for VA buyers, going back to that, just because I'm looking at this question or that he's saying, that's 100% true. I do think that there's when you have agents that are a little bit more savvy and understand and maybe been around and a little bit more seasoned time, I think that kind of goes away. But especially for the newer agents, you know, the 1 to 5 year agents, they're not really understanding.
I don't think it's the agents. I think it's really the sellers. The sellers don't understand.
Well, but the
agent educates the sellers.
But the agent's coaching the seller. See, sometimes the seller of the property has no idea what a VA loan is about.
At the end of the day, the seller doesn't care if you're a VA or what type of buyer, because at the end of the day, what they care about is how much money I'm going to make in my pocket.
So yeah.
So what it comes down to is, what is the VA limits right now? Guidelines. What is their max?
Well, it's up to $1 million, but I mean they still have a county limit.
What is the county limit?
If it's not concurrent, right? So
yeah, what is the county limit?
Or if it's concurrent, it's probably going to mirror, but right now it's 510, 400. Now it's going to go up next year. We talked about conventional going up to 548, 250. I'm sure that VA is going to do the same thing, 548,250. I think, and I'll let you answer this question, but I think what I'm saying is sellers are not in financing in that world or even in real estate. That information comes from somewhere. And my opinion is it comes from the selling agent coaching them the wrong information.
No, I'm going to say that's incorrect, and here's why. Because conventional, right, you can go up, right, with the jumbo loan. The problem is that there's not a lot of VA buyers that are approved above that county limit. So if you take a look at the marketplace today, you have more homes that are above the 500 range. That's the problem, because once you hit that 510, agents don't even put VA financing on there because they know it won't even approve.
Yeah, but that's what I'm saying is this is
it has nothing to do with the agent or has nothing to do with the seller. What it has to do with the limits. So if I took a listing that was at 600,000 or 800,000, at this time I wouldn't add we would accept financing for a VA buyer.
Yeah, but what I'm saying is they would still qualify though, right?
Here's the thing. What happens is when we take a property, we tell the public of what type of financing that we're going to take. Majority of the time, VA buyers won't approve. But if I was an agent that's representing a VA buyer, and I know that he was approved for $1 million, and I know that on the MLS states that we don't take this because this property is above county limits, I understand that you don't have it on here, then I would still submit the offer.
There you go.
And at that point, that agent will also know too as well. Because what happens is, that eliminates for all the people that are technically not qualified at that price point, because you don't have too many VA buyers that are going to qualify for $1 million versus the 510 and below. You see what I'm saying?
Yeah. No, I get it. I get it 100%.
But it's all about debate, so there's not a wrong or right answer.
Yeah,
so,
I mean, like I said, we've all done different experiences, which is good. And
what is the next? This VA information makes us more conflicted. Was it conflicted to use a VA? Oh, confidence to use a VA in a loan in Vegas. We move out here next year from California.
I would do it. Look, I would never, like, if I had an opportunity and I had if I was a veteran, which I should have been, I wish I would have at least gone there. The perks and benefits that you get, I would have used it. You know, so
gotcha.
VA come in at lower appraisal.
No, that is not true. Are they more conservative? Yeah, you know what? If you say, are they conservative? Yes, they are going to be more conservative on a VA appraisal. However, as long as you can support the comps, you'll be okay. So if homes across the valley or homes in that neighborhood is at 600,000 and you submit an offer at 610, it probably ain't gonna come in at 610. It'll probably come in at the 600.
So comps right now, I've had, all over the board mixed things coming in back.
Yep.
Some of them over value, some of them under value. There was a period where it was always coming in at value because there were so many properties being sold that supported the value in the area. What are you getting on that? Is that kind of all like you pretty good, man, on comping properties?
Yeah. So the last couple of times, some of my agents were getting homes that were appraising below the offer price. You had to renegotiate it. Mm-hmm. Right now, what's happening is it seems like the appraisals are coming at or above. I just did one where we just made $5,000. The buyer just made $5,000.
Equity, right?
Yeah, equity.
Yeah. So, and that's good.
It's all case by case basis.
Well, and then look, you don't have to tell. As a buyer, you don't have to tell the seller that either. You could just say, "Hey, it came in at value." So, as a buyer, if you do have value come in, it could help you or it can hurt you. You can come in 5 less, 10 less,
and you don't even have to disclose it, which is great. And if it comes below, you can always renegotiate it.
That's right. Mm-hmm. But like going above, it's pretty good. I mean, let's see what else.
Do you think the city will develop enough to sustain the out-of-state buyers' interest in moving to Vegas? There's so much land out here, dude.
Do you think the city will develop enough to sustain? Look, as long as there's ways to keep going. I mean, there's a lot of land going up north.
Yeah.
Like if you keep going towards, what is that, like Mesquite? Like going towards that Mesquite area or Utah, there's a lot of land out there.
Well, have you ever flew over Vegas and looked down?
Yeah, it's all just this one clump of...
Dude, there's so much dirt here. I think the population can run up to about 10 million homes in here.
Yeah.
10 million, dude, seriously.
Yeah, it's crazy. And I think that there's a lot of properties that are going to...
Then you know what's going to happen? Once this valley fills up, then you're going to see high demand. Especially the closer you get to the strip, it's going to be more expensive for sure.
Yeah.
Guarantee it.
How long is that going to be, though?
I'll probably be dead.
Yeah. 50 years, probably.
Yeah.
We'll
be old, like 80. I told you. I told you. Didn't believe me.
Yo, Chuck, where can I find info on larger land tracts to build custom further out of town?
Out of town?
I don't know what that means.
I'm not too sure, but you can still go to lvhomeexperts.com's website and just
I think he's saying
type up land.
Yeah, I'm sorry, but I think he was saying info on larger land tracts to build custom homes further out of where we're, out of Las Vegas.
Yeah, I mean, you can literally go to clarkcounty.gov and do the aerial map view, and it shows you the addresses, the owners, the parcel, right? Shows you exactly how much they bought the land for. And what you can do is, send those guys a letter or the owner and say, hey, I'd be interested in buying your land.
Yeah, it's crazy. One of the things too is as you keep going out, what is that, Pahrump? Is that going towards west?
What are you talking about?
That's Pahrump, right?
Yeah.
Okay, that's going down towards I don't know, to west, right? West. So they got a lot of building going out there, but then they got mountains right there, and it seemed like that once you go over those mountains.
Oh, you talking about the southwest?
Yeah, towards Bonnie Springs old area.
Dude, you don't even need to go out that far. If you go, there's so much land out in the southwest.
Yeah.
I'm talking about if you went southwest.
Yeah.
When I say southwest, everybody just thinks
about.
Blue Diamond. But I literally went out to some tracks and I did some videos out there with KB Homes, and it was just nothing but open terrain. And they had miles and miles where you could have just bought more land. I mean, they're probably going to end up filling all that out there. You still got the northwest. You got the northeast. I mean, there's so much land to be built.
Rocco, I'm sorry, man. I was reading this. He said, look at Rocco's comment. When you're 80, Chuck, it's your home tours videos are going to take twice as long, and you'll be limping around and walking on a cane. Hey, but you'll still be doing it.
I still be doing it.
You're going to still be hopping up on desks.
Dude, if
tables?
I'm at 80 years old, do you think I'll at least have 1 million subscribers? Would have to, huh?
You would hope so.
Yeah, I would hope so.
I mean, if you keep it up, I mean, shoot, man, you do that. This is like a part-time job for you now.
I know. I don't have no choice but to do it.
So,
Jonathan gives a thumbs up. What up, Jonathan?
Oh, you know Jonathan?
No, I don't.
Oh. I want to say one thing. I know we're kind of probably wrapping this up. I think that Vegas is, what do you think about this thing, like the strip and everything kind of getting back to normal? Do you think that's going to take place next year? You think it's going to, I was talking to somebody today that was working on the strip, and he said the can keeps getting kicked down the road where unemployment and, there's people employed, but the unemployment's still high, and they're extending out people getting evicted.
Yeah.
Could they keep doing that? Could unemployment kind of roughly stay the same? And do you think the economy as a whole, not in the housing market, not just in the, financing, real estate, whatever, just as a whole, is Vegas going to recover slowly, or is it going to be a quicker process because it's Vegas?
I think it's going to recover slowly. I think what's going to happen is you're going to have so much people from out of state coming out here buying, and it's going to get to the point where people are just buying so much homes. And I don't know if our economy can self-sustain all these houses.
Well, people here
and support.
If you have unemployment as high as it is, and a lot of these people that are living here, let's be honest, they can't afford $600,000, $800,000 payments or mortgages, let alone buying cash.
Exactly.
So how do they get houses? Does this area does the Vegas have to
Have you ever heard of multi-generation living? And I think that's the direction that we're going to be heading in here in the next couple of years.
Man, I hope not.
And when I say multi-generation living, what I'm starting to see is developers, right, are starting to do this now. They're starting to build 2 homes in one, right? Now you're going to have, you and a family member, right? 2 households living in one household, dude.
Yeah.
It's going to be like Hawaii, man. That's how Hawaii is.
Well,
dude.
Look, I don't know. Here's the thing. I do think that things will correct somewhat. They'll slow down, maybe kind of. But as long as people are trying to flee California and flee these states because they don't want to stay there anymore, prices will keep going up. And I think that's the worrisome for me, is that what if you are somebody down there on the strip? You look back 10 years ago, and if you're somebody that was, a server and making about $50,000, $60,000 a year, you can be that person that goes out and buys a house. And can they still do that today? Yeah, but it's a lot more challenging. There's a lot less home to buy. So I'm just hoping that at some point it does slow down. I don't want the values to keep going up. And I don't know. It's just something to pay attention to.
Guys, we're going to wrap up our show. Just wanted to say thank you so much for all the comments. Until next week, until we meet again. Or maybe Saturday. And we're going to do this Saturday again, right? Is that right, Dan?
Saturday. What time on Saturday?
I don't even know. We got to get a set time on Saturday. But Saturday is going to be more fun. We just answer any questions and just a couple guys talking. And we may have a special guest that's coming on the show on Saturday. I know you guys been asking for him for some time. Jason, my man.
He's coming back.
Maybe. He talked about it. Okay. So, there's a lot of fans out there that likes Jason. So go ahead and follow Jason at Vegas Videos on YouTube. Other than that, thank you so much for tuning in. Until next time, I'm chakits Krulsawat with Simply Vegas, and my man Dan French with Guarantee Rate Mortgage. Go to lvhomeexperts.com. Also, click on that financing tab too as well. Start your financing. Other than that, have a great day.